Hello guys, this is Soji and you are welcome back to Soji Forex. In today's video, we want to look at how we can profit from trading pullback or retracement. So what we are trying to say in essence is that in this video, we want to see how can we make entry after a pullback. Let's begin from this area. Looking at this market situation, you agree with me that this is a downtrend. Okay, so if we connect our trend line to this point, you agree with me that we are in a typical downtrend, and with our structural point, which will be having a higher high, higher low. Okay, sorry, a high and a low. Here we are having a lower high, right? And all these sides are liquidity build up because none of these two take this low. So we are seeing all of those areas as area of liquidity that are being built up in that zone. And you can see that price keep on pushing. So here is our low, and here now we have our lower low. Okay, this couldn't hold, so this is a liquidity build up. Okay, here we have our lower low, and here we have our lower high. So in essence, we are trying to say that we have a high here, we have a low, we have a lower high up there. Here we are having a lower low, another lower high, and here we are having a lower low. So you are wondering what happens to all of this low. All of this low you are seeing here are internal liquidity. Okay, so if you don't understand the concept of liquidity, you can watch our previous video where we discussed about liquidity, and we say we have external liquidity and internal liquidity, and we say we have internal static liquidity, and at the same time we have internal dynamic liquidity, and we have external static liquidity and external dynamic liquidity. So all of those are on this channel. You can refer to the video on liquidity and you will understand what I am saying. Okay, so this is our structural point. So this has been identified. So when price move from this level to this point, what we need to do, we are expecting that it has sell over time, so there should be a pullback, okay, in order for us to have the second leg. And this pullback, when the only way we can determine is for us to mark our low and our high. And after we have done that, what we need to do, pick our Fibonacci retracement tool and place it at that range. Okay, so this is the range, and you can see what happened. Remember, we say a pullback begins when price closes above 23.6, and as you can see here, price closes, this candle closes above 23.6, which we said is our condition for pullback. So price closes above it, 23.6, look at it, price closes above it, and even above our 61.8 level, and then it gave us this candlestick pattern. So we'll make our entry comfortably and we'll be on our way to the downside. So that is it, and then you can see that this price now pull back. So once we are at this level, we don't make entry until we begin to look for an entry point once price is above 50.0 level. Once price pull back to 50.0 level, that is where we'll begin to look for a continuation sell entry, and our confirmation can be either by a candlestick formation. Okay, look at this level. When the price get to 61.8, we have this candlestick, but this candlestick did not engulf the previous candlestick. We'll only be trading engulfing candlestick pattern and a pin bar or a hammer. Okay, and here we did not get such candle. So all of these play around. You can see that even these ones that play around did not go above. All these ones that play around did not go, look at it, none of them close above this bearish candle, and you can see that price continue to the upside. But coming here, we have this hammer. You can see this pin bar here, then with a follow-up bearish candle, which is this. So that will give us our entry here and our stop loss, and we are good to go. Then after that, our next zone now become this. Remember where we mark our low the other time, and this. Okay, so I am referring to this level here. This is our lower low, and here is our lower high. Okay, so all of these are liquidity. So what do we say? We put our Fibonacci retracement tool now, and price begins to pull back. Look at here, price did not get to 23 and it gave us a rejection. But since it did not, it is not valid for us. But when this particular candle close, it is a beginning of a retracement for us. And then you will be waiting for price to pull back. So we say once price get to 50 level, you can begin to look for entry signal. And here you can see this massive bearish candle that we have. And that is our entry signal for a sell. Okay, so that is for that. So it is simple and it is easy to identify. And then coming here again, we'll mark up this level. Okay, we'll mark here and this point. So what are we considering? We are considering this and this, and we want to see price pull back. So when price closes below 23.6, it's already a retracement for us, right? Then another thing you need to look out for when marking this zone, once your retracement begin, mark out, look at your chart critically. Immediately your retracement begins, look at your chart critically and see if there is any place you can find smart money cube. Here now, this is a smart money cube. This single bearish candle in the midst of bullish candle is a smart money cube. So you will mark, if we find this, we are going to mark this. Then secondly, if you want to understand what smart money cube is, please, there's a video on this channel where we discuss about smart money cube. You can refer to that video for better understanding. So we'll mark this smart money cube because there is an order that formed this smart money cube. So there's a tendency that price will reach and it will turn back. Then secondly, you will look and find area where you have imbalance. Just like here, we have imbalance. So there's a tendency that price now, okay, right here now, we'll mark our smart money cube. I just marked that candle now. And at the same time, here as well, we are having an imbalance. Okay, so just as you can see here we have a smart money cube, and here we are having an imbalance. So there is a tendency that this price coming now will pull from here into this smart money cube and continue to the upside. In the same vein, there is a tendency that this price will pull to come and fill this imbalance, okay, before it will now turn to the upside. And remember, all of this is still within the range of our pullback, okay, because it will only become a break of structure when it closes outside of this previous low, which is our 100 level. All right, and you can see in this scenario the price came now, pull into our smart money cube. You can see it here. This is the smart money cube zone that I have highlighted. Price pull into it, and afterward it gave us a Harami candlestick pattern. You can see those follow-up candle, then this pin bar, then we can make our entry from 61.8 and our stop loss will be below. So this is how to trade a typical pullback. And after that, we now have a new low. Okay, our new low now is here where price turned from, and our new high is up here. Okay, for proper knowledge on how to use Fibonacci, you can go to our previous video. We've discussed extensively on how to use Fibonacci retracement. And look at now, this is our new range, and look at what happened. Price at this time pull back. Okay, look at when price came here. This is our 61.8. He gave us this engulfing candle. We did not get a follow-up candle. Then we get this particular pin bar. For me as a person, I will not be taking this trade at 50 because my stop loss is supposed to be at this 100, which is too far for me. So I will either wait for price to pull to 61 or anything below 61 below is where I'll be making my entry. So this particular entry at 61.8 now, with this hammer could have been my entry, followed by this follow-up candle, and I'll be on my way to the upside. Now remember what I said. I said you need to mark out, look for where there is imbalance. And if you look at this critically, here we have an imbalance, right? So you can see that this price play to fill in this particular imbalance, and after filling this imbalance, it gave us this candlestick pattern and it moved to the upside. So in the same way, you can trace this to your lower time frame and see the formation for your entry. Okay, let's look at it from our lower time frame. Yeah, you can see it. This is what we were seeing from that side. Look at it on our lower time frame. You can see that formation. If we are to use our TDI, this is a divergence. I am confident and I am sure of it. And if you are using your trend line, this would have been your trend line. Alright, and it break it and you are on your way to the upside. So that is how you can find your entry. You can streamline your entry to your lower time frame. I believe you have gained something, you have gained value from this video. Please do not forget to like, share, subscribe to the channel, turn on your notification bell, ask your question in the comment section, and we'll see you in the subsequent video.